When they saw market बहुत ऊपर जा रहा है, ट्रेन छूट गई, पकड़ लो। And जब वो नीचे जा रहा है तो दे आर सो फियरफुल कि पता नहीं मार्केट कहाँ चली जाएगी, ये सब खत्म हो जाएगा।
इसको गैम्बल माना जाता है।
Reading it, studying it, taking the whole knowledge, it is never and it was never and it is never a gambling.
Which age is the right age to?
As soon as you are into college, if you really want to be filthy rich man, then you have to wait for stock. You have to put the money regular basis and wait for that time.
Welcome to Dopamine High.
Thank you.
How are you feeling today?
I'm good. I'm very good, and I'm so happy you invited me today.
Can you please introduce yourself for our audience?
I'm AJ Kapoor. I did my schooling from Jammu only, BBN. I was a gold medalist in 12th board here.
Okay.
And then I went to Delhi University. I did my BCom honors from Shriram College of Commerce, Delhi University SRCC, and then went to Bombay for learning all the ins and outs of stock market. And then I got all the financial certifications from the financial bodies in the Bombay, and then I introduced this trade to my state.
Lovely. That's long back. How did stock market come into your life? आपने कहा आप बॉम्बे गए तो ये कैसे प्लान हुआ, कैसे स्टार्ट
Maybe
हुआ?
I don't know. It was in the 11th class. I just got a feel I should be investing. I should be putting my savings in something which pays more than the other fields, the banks, the stock, the real estate, and the what you call the gold and everything.
Right.
So I explored everything, and then I just started with my whatever savings I have, and then even my father, after seeing my progress, he supported with my money, and then I found the cost of this running this business or investing in J&K was very high, as high as 10% when we buy, when we sell.
Right.
4.5% plus taxes local used to charge for buying, and same as selling.
Right.
So I looked for this opportunity in Delhi and Bombay so that I can invest and I can get a better return. And then next, when I was doing this for me, I thought, why should I not do it for the clients also?
Right.
So then I completed my studies, went to Bombay, learned everything in three years, got all my certifications, exams clear, which are required to start this business, and then started it in Jammu.
What is the biggest myth of stock market in while you were investing back in the day?
See, actually stock market is a full-time disciplined investment trade.
Right.
It's not like you listen to somebody, you ask somebody where you are invested, you put the money somewhere, you listen to the TV, you put the money there, you read the newspaper and you put the money in the company. It's not like that. You have to be a financial literate person or hire a professional, and then only go for the investment.
Right.
And mainly you have to segregate what money you need now, what money need you in 3 years or in 10 years, make a target, invest accordingly, and then it's not a gambling, it's a highest paying investment right now not in the country, even in the world. So if you start gambling, you start over trading, you start what you call speculative trades. Yes, there are chances. If you are looking for the higher gains, you may have to suffer the deep losses also.
So if you had 5 lakhs today, or somebody who's a beginner, what would your advice be? Should they invest in gold, stock market, crypto, real estate?
See, if you compare the stock market with the other instruments, the real estate is normally now not within the reach of a normal investor.
Right.
It's only if it is his own need, he buys it, not for investment. It requires the huge amount.
Right.
Then other issue is the liquidity. You don't get the immediate money by selling the real estate. You may get the buyer today, you may get the buyer in 3 months, 6 months, and then you may have to sell in on distress values if you need it urgently, right? So then these are two issues. One is the tag and other is the liquidity.
Right.
Similarly, if you go for the bank FDRs, recurring deposits, the money you get in the shape of interest is not able to surpass even the inflation which is prevalent, right? So if your money is not growing or outperforming the inflation figure, your money is actually degrowing.
Right.
See, I give you a very small example. Any car, for that matter, if you see as a Fortuner, it was 15 to 20 lakhs tag somewhere 6, 7, 8 years back, right? And if you put the parallel same money, 20 lakhs in the bank, and now the Fortuner is 50 lakhs, but your money has not grown to the 50 lakhs. So your money has actually devalued, devalued, and you cannot buy the car. That car now,
right.
It should have been, your money should have been grown over and above the cost of that car, so that you could have bought that car one, and you could have saved some money also.
Right.
So this is one. Other gold, if you say again, there was a in the gold you have to wait for the longer period so that you get a growth.
Right.
Definitely, yes, it is now a liquid asset. You get the money as early as possible, but still the prices are on the very higher side. We don't see the much return in immediate 1 to 3 years. Yes, in 3 or 4 years, 5 years times, you may get the double what you invest here, but you might have to wait for 5 years. So it is like a cyclic commodity.
Right.
So stocks, you invest looking at your need. One, you only do out of savings. Don't borrow and invest, right? Because your return will be eaten by the interest of your borrowed money, right?
Yes.
So you put the money in different baskets. You need money. You may be requiring your money for some purpose, maybe some household purpose, maybe some marriage purpose, maybe some child, your children's study purpose. So segregate that money with your financial knowledge or with the help of a professional wealth manager.
Right.
Distribute the money, and definitely, yes, last 25, 30, 40 years of experience. I am into this market almost 40 years now as an investor, maybe 40 years, and as a stock portfolio manager, as a stock market analyst, stock broker, almost 33 years now.
Okay, lovely.
So we have seen.
What about crypto?
See, crypto is a unregulated trade. There is no stock exchange. You don't get anything out of it. If in case of any of your grievances, there is no regulator. See, the RBI, SEBI, they don't have any control.
Right.
There is no stock exchange where you sell and you get your money, or you buy and you get your stocks.
Right.
So it is an unregulated trade, and we can call it somehow as an illegal trade also.
Okay.
So there is nobody in the world who takes the onus of your trade. If you are losing your money, if you have bought and you are not getting the buyers when you want to sell, and you don't know whom you are selling, you don't know whom you are paying money, you don't know whom you are selling, and where from you will get the money.
Right.
So these are all hidden things. I don't promote, I don't support.
I was just curious to know, how much money have you earned in a day or lost in a day?
There are phases.
Right.
Generally, we don't look for the what we call the sudden gains and sudden losses. Yes, we have the checks on the system. We work according to that. But see, there are certain days, there are certain events, right? For example, today is a budget day, and government is giving us certain benefits in the tax money, or something very beneficial to the industry, or some incentives. So whenever these days, right, or whenever there is some policy announcement by the government about some sector, so on those days only, special days only, we get a sudden jump, and it is like a luck. You are into it and you are getting good money on a single day.
Yeah.
So this is one, and secondly, there may be some global bad news, some war, some terrorist attack, or something like that, or some global certain countries putting changing their policies, like Trump putting the duties, hell of duties on whatever India is exporting.
Yes.
So these news, they cause a sudden fall in the market.
Right.
But we use them as a buying opportunity. So these days don't come on everyday basis. So you should be ready with your money on those days when the market is drastically falling. You should enter into the market in phases. That always pays. Generally, people do the reverse.
Right.
When they saw कि market बहुत ऊपर जा रहा है, ट्रेन छूट गई, पकड़ लो, then they lose. And जब वो नीचे जा रहा है तो they are so fearful कि पता नहीं मार्केट कहाँ चली जाएगी, ये सब खत्म हो जाएगा. बट ऐसा कुछ नहीं होता. That is the actual opportunity to buy.
अब जैसे आपने बोला, दिस इज अ गेम ऑफ ग्रीड एंड मनी. इंडिया में स्टिल देयर इज दिस माइंडसेट कि स्टॉक मार्केट में नहीं करना है इन्वेस्ट.
नहीं, ऐसा
इसको गैम्बल माना जाता है ना. सो व्हाट डू यू हैव टू से अबाउट दिस?
नहीं, ये बिल्कुल गैम्बल नहीं है.
हाँ जी.
मैंने आपको शुरू में भी बोला कि दिस इज ए फुल टाइम डिसिप्लिन ट्रेड. You have to be very disciplined in it. You have to be full time into it. Or if you cannot do it, hire a portfolio manager, hire a wealth manager, give him the money, track on, or give the money into the structured products, which are small in tag. So though you cannot see, you can monitor your investment as well, right? So if you are regularly into it, reading it, studying it, taking the whole knowledge, and forming the formula of full-time disciplined trade, it is never, and it was never, and it is never a gambling. If I give you a very small example, you put 10,000 rupees, only 10,000 rupees every month for 15 years at an early age. In 15 years, it will be 1 crore of rupees minimum. Minimum I am talking. It can be, I cannot guarantee that, but it can be 1.25 lakhs, it can be 1.5 lakhs. So you have hardly invested 18 lakhs and you are getting 1 crore. So it is like, and another thing, whenever opportunity comes, only then put the money. Don't trade every day. See, whenever there is a fall, whenever there is a bad news in the market, identify the stocks, which are good stocks, which will perform. So you put the money into that.
Which age is the right age to?
See, I tell you, as soon as you are into college, maybe you start your college, like 12, passing after 12th, it's the right age. You start studying about it. You start with the small money of your own savings, or you can tell your parents also to support.
Right.
And that is the right age. That is the right age. The formula I told you, 10,000, 15 years, 1 crore. So if you start investing over a period of time when you are into job, you may start putting 50,000, a lakh of rupees every month. So that will be 15 crores in another 15 years.
Right.
So if you start at your early age, somewhere around say 15 to 20, when you are 17, 18, 20 years, you may get 3 cycles of these.
Yes.
Multiplying your money 3 crores. And that is a very simple mathematical formula. You can calculate anything which is growing 15 to 16% every year will pay you compoundedly 1 crore in 15 years. It's not like I am telling you a very hyped figure. It's a
Yeah.
very normal return, but that return is possible only and only in the stock market.
Which Indian company can you bet on for next 10 years?
See, what I see is the companies which are into semiconductor, which are into pharmaceuticals,
Okay.
which are into AI,
Okay.
right? Which are into hospitality trade,
Okay.
tourism, which are into real estate and which have a track record. So, and then which are into space and defense. These are different companies. I don't say one company. These are different sectors. You can look into these sectors and then see for the performing companies and segregate your money into those 5, 6, 7 companies. Don't put your all eggs in the one basket.
What is that one stock that everyone loves but would never buy?
ऐसा है कि स्टॉक तो आप कुछ भी आइडेंटिफाई करते हो बिकॉज whatever is in your office, whatever is in your home, every product is produced, manufactured by the company who is listed in the market. For example, your Apple phones, Apple is listed,
Right.
among the top 5 companies in the world wealth-wise.
Yes.
See, you do your paste.
Yeah.
The Unilever, Hindustan Lever makes those pastes, and right. So whatever you use, whatever you eat, Maggie is the again Nestle's product, right? So Nestle's stock may be one share maybe in few thousands, 10,000, 15,000. So similarly, whatever car you buy,
Right.
it is owned by a company who is listed in the stock market.
Right.
So everything is correlated. Your products and the company and the whatever you invest. So maybe the companies who have the higher price tag, maybe it is in 20,000, 15,000, 18,000, one unit. You love that stock, you love to have in the portfolio, but you don't have the money to invest, or you don't have the conviction to get into it.
Yes. Do you think social media influencer, they have a hold on what we buy or what we don't buy?
For social influencers on the market, it's a mixed reaction and mixed action. Many people I find, see, I don't make it generalized term, but many people, you should first check the credential of that person, whether he is a good portfolio manager, whether he is on some good position in some mutual fund or stock market or in some corporate thing. Then go about it. Then listen to him, follow him. No, but don't follow him. Verify the facts from the market, from the internet, from the company's record, from the whatever you read, whatever you use the instrument or the material to educate yourself, verify that. But see, many people are good, right? You should follow. There are many people, are rather there are more people who are doing it for earning their money stake.
Right.
So they get a more footfall, they make some viral news, they get a more footfall, and whatever money they get from maybe from what you call the Facebook or YouTube or Insta.
Right.
So there are many people, more people rather.
If the market crashed 30% tomorrow, what would you do? What would be your first step?
So I'll identify the blue chips. I'll identify the sectors which performs, which are going to perform. As I said, defense will perform, space will perform, the aeronauticals will perform, pharma will perform, hospitality, tourism will perform, right? The new clean energy companies, hydrogen on which they are working, the solar they are working, they will perform, right? So there are AI companies will perform, semiconductor companies will perform. So there are many sectors. I'll look into it. I'll make a peer comparison in which sector, which companies are doing good, and then it's not only the company which are doing good. We have to see the valuations also. They may be expensive. You have to leave them. You may have to choose for the other company.
Yes.
So I'll definitely make my homework, take my homework out, and then see the stocks, different sectors, and in the sectors, the performing stocks, and among the performing stocks, the cheap valuation stocks. Right? There is always a price range which you should look for, which is not stretched beyond the valuation.
Right.
So valuation stock may be, if the valuation is higher, you should buy, and if valuation is low and the stock price is stretched because of overbuying or whatever it is, over demand, you should not touch that stock because there will be less scope to grow.
Is financial freedom more important than high paying jobs?
See, what I see is it goes parallelly. When you are into job, you will not be definitely into high job when you are a beginner. You may attain the peak. Maybe if you are doing good, you have good qualifications from, say, IITs, IIMs, chartered accountants, whatever it is. You may be a CEO at the age of 40, between 40, 45 and getting the good jobs. Yes, after that, you may leave the job and go fully into this trade. But yes, from your age of 25 to 45, you should go parallelly, do this and do parallelly into the market, because you'll have that time to learn about the market also. After at 45, 40, you will not have the time. So either you leave that time or you appoint a wealth manager, give him the money, monitor yourself on even weekly basis, daily basis, whatever time you get, and then you go into it. Definitely, yes, this investment is the highest return paying in the market if you are doing with your good knowledge or the help of your wealth management.
Would you rather want to be rich through stocks or through your business?
See, business, yes, business, it's both ways. See, stocks need, if you really want to be filthy rich man, then you have to wait for stock. You have to put the money regular basis and wait for that time, maybe minimum horizon of 10 years and then 15 years. If you can have a horizon, you have a saving. That is why I told, only put the money which you have saved, not the borrowed money, not the extra money, which you can spare. Only do with that and then wait for it. You will get ample money. You will actually see the multiplication effect in your money growth. Multiplication effect, not the addition.
So do you trust I want this to be an honest one, do you trust your own expertise, or do you trust on an growth manager?
I definitely trust on them as well.
Yes.
I do my own homework as well.
Yeah.
And whatever information I get from the wealth manager, I filter it first. I don't blindly do it on. See, even I have experience of now almost 40 years.
Yeah.
So yes, I take the help, and one should take, because you may get some good points. You may come to know. See, it's a big sea and a big financial dunya, right?
Yeah.
So you cannot read everything. You cannot learn everything.
Right.
You may be learning, or you may be on some different financial fields, different companies, different sectors, and your growth manager may be specialist in other sectors. So you should rely on your own study, and then you should definitely take help of the advice of that, and then filter it.
Right.
Whether he has done the full homework and it goes with your criteria, what you follow, and if it suits you, you should definitely invest into that as well.
Uncle, you've used the word financially literacy is very important in stock market, right? So for someone who's a beginner, how do they get that literacy?
See, he should have a habit to listen to the, see, it's more like now everyone is comfortable with the videos,
Yes.
with the more, not with the literate component, but yes, we should listen to the people who are master into it, who are financially, they have performed for last 20 years, 30 years, they are doing a good job. You should always listen to him, one. Then you should have a basic knowledge of, see, there are three things. One is fundamentals, one are technicals, and third is financials. So every company, you should study technicals and fundamentals. You have certain training courses, or you have a habit of reading.
For someone who wants to learn basic, is there a book?
Yes, there is a book, but there are online courses as well.
Okay.
You can do small courses of 10 days, 15 days. 10 days matlab 2 weeks, because Saturday, Sunday we don't work, stock market is closed. So there are different courses. You have a basic knowledge, then you have a fundamental knowledge, then you have a technical knowledge, and then you, with the help of these, you online start dabbling into the stock market with the smaller money capital, say 5,000, 2,000, 3,000. You put your money into 3-5 companies, very small amount, 500, 600,000 rupees. And then you start watching the trend, how the market is performing, and with the market, how the stock is performing. This is one part. This is technical part, right? Then you should read about the fundamental, about the company, about the promoters, about the which sector they are into it. Is it a good sector for future? Is this company is doing good in his sector? So he may be a tier 1 company, he may be a tier 2 company, he may be a tier 3. See, as such, as see in IT, we see TCS is a tier 1 company, HCL is 1, Wipro is 1, and Infosys is 1. And if you go for the tier 2 companies, there may be number of companies, right? Many companies. So you should know how they are doing, as these companies are not actually doing for last 3 years. They are into the half of their price of what they were in last 3 years because of this Europe and US and everything, because there is a recession there. There is no demand there. So you should, I said, go for the basic course, then read about the companies, then study the technicals. What I said, put your very small capital, 4,000-5,000 into that, and then start watching the trend with respect to the other companies, with respect to the news, with respect to the market, with respect to the sector. So you see that. And then financials, you should read whether company is into profits, whether company has more debts or the capital. See, whatever money he raises through IPO, that is a capital. So that is interest free. There will be no cost on it. Still, if you have a plant of 5,000 crores, you have got a IPO of 1,000 crores, you have to buy 4,000 crores from the bank. So out of your money, you have to pay 80% to your banker. So it is not a good company to enter because the debt ratio is very high. So there are many parameters. How much company is earning and how much one shareholder is getting for one share, and how much multiple of that is the stock price.
So would you rather, safely get the 12% or the 10%, or take a chance to get a loss of 50%?
See, I told you, the people who say it is gambling, they work for 50% return. and they are bound to be on either side, 50% upside or 50% downside. So they have to be ready for that. And if they are not ready, they'll only say that this is a gamble, I lost the money. And then there is one very golden rule into it. It's like you have to always follow a stop loss. You never know, there is a sudden bad news which nobody expected, and your stock, some of your stock has started falling drastically down. So you should have a cap. You should have a cap where you should take an immediate exit. You will get the opportunity to enter it again on more down levels, but you should curtail your losses. So if you are looking for 5x of your, yeah, say 15%, yeah, 20%, yeah, 30% of your gains. And same time, you should cut your losses at downside 5%, 10%, 15%. If you are looking for 5% gain, you should cut your stock in that bad times at 2% so that you minimize your losses also. And then it is not actually minimizing the losses. It is, we call a learning experience one and a opportunity to get that stock again at a lower price so that you average out the price of the whole stock and you get a better return in the future.
What is that one piece of stock market advice for a beginner?
See, beginner means at the age of 17, 20 years. One, start learning about the market. Two, second, take the online or offline classes for fundamental, technicals, basics. Three, four, start putting small amount of money into your SIPs. Start entering the market through IPOs. And lastly, enter into few stocks and sectors which are growing by putting very small amount of money through stock market, and reading about those companies, corporate sectors regularly will make you a very successful investor.
What is the biggest financial mistake that you have made in your life?
See, it's not like financial mistake. See, financial mistake, there is one what I did and there is one what one should not do. Every wealth manager or a stockbroker, instead, yes, definitely his first goal is to get the money of his clients growing. And he should look for their wealth management, not the trading. What he should not do, not the trading in his own account and getting involved in the market through his own investments, because he'll not be doing the justice with the people and the client, right? This is one. So as I handle almost approximately 7,000 clients, and I have a corpus of 300 crores in stocks of the clients and 200 crores of mutual funds of the clients. So my job should be and has to be work for them every time, work for them continuously to multiply their wealth, to grow their wealth. I am their wealth manager. They have faith on me. They have faith on my knowledge, not only on me, on my knowledge, on my performances. So one, I should not, or nobody should trade in his own account. But yes, other side, when I am looking for this big amount of AUM of the clients and this number of clients, why should I not put my money or my parents' money or my kids' money into the market as well? So SIP and the long-term investment. Whenever there is an opportunity, market is bad, put all the money into the stocks and sit back 3 years, 4 years, 5 years. When it is getting good return, and cash that money and put in the bank. So this has to be, I should not be deviating into the regular trading, speculating, day trading into the others. So this I should follow. And I should not say it was my mistake, but it may be my urgent need. I have to sell my stocks for meeting those maybe emergencies or urgent needs, maybe at losses or maybe at lower profits. So that could, I admit, I may have to be forced to do, or I did it. I did it because I may have put the more money into the stocks. I should have kept that money into some backup. So this is what I said. Yes, you keep your backup one, and then you should not stretch yourselves. So I said not once, twice. Only put your comfortable savings into it. So only then you can see the multiplying effect of your returns.
Thank you so much. It was lovely talking to you, and we've learned a lot.
Thank you so much, Ji. I'll be looking you again on better side of it, on the higher side of it, and the technical side of it. Right. Thank you so much.
Like,
share,
subscribe
to Dopamine High.
Thank you.
Thank you.